Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So, euro currency again in focus. In general, on the daily chart, we could see that market, it seems, has reached the level that we have specified, and in general is rather fast to treat it as a brand bottom. So even it has moved it slightly higher than the 30% level. So we have closed about the 3x3, and formally we have the brand bottom in place. Now the question is only on intraday chart performance, how it responds on this level, and whether it's enough to try to take the short position with some pullback. So with the cross-market analysis, it seems that some background exists for a possible downward action, because if you take a look, for example, on 10-year yield, you could see that 10 years dropped back to the support, now shows the return. Some increase in interest rates, and in general this consolidation, as we said, the pennant before the major target usually suggests preparation for a spike up. Whether it will be just to this level or market will just keep going higher. But anyway, when the market stands just few pips from some important target and shows very tight consolidation, it usually indicates the preparation for a breakout. Because otherwise, market should start dropping. So if it hasn't happened, so it means that we're going to move slightly higher. In general, you could take a look, it probably could remind us some kind of the dynamic pressure. So we put the MACD predictor, you can see the price showing upward direction while trend stands bearish, and it mostly could be just response on this multiple reaching of the overbought area. So market just stands flat, but it supposedly could move higher, which in turn should support the dollar as usual, and consequently for euro currency it might be the reason, in terms of the cross-market analysis, that could start pushing euro a bit lower and complete our brand bottom target. So that's just a common sense logic that we have currently. So geopolitical tensions were come down for a very short term period, as you could see. It's currently Putin hasn't yet come into the China, but it's already, he has commented that Russia is not satisfied with the answer of the United States. In the United States, they tell what you have expected in general. So the piking in the media space and still keep going. So, and this is also makes markets nervous a bit. This also works sort of like the headwind, actually, as you can see on the stock market. Just a rally has happened. In the United States, it looks a bit better, but in Europe, on the DAX index, you can see that's becoming weaker. So yes, market's trying climbing higher, but it's some bearish continuation pattern is forming here. So you can see, and today DAX opening with the starting sell-off. So in general, this is not impressive. Mostly reminds the retracement, which before downward continuation. So that's why I think that all this stuff that we discussed in the weekly report is still valid. Now let's take a look on the hourly chart. On the hourly chart, as we have suggested, indeed, yesterday, after the XOP has been reached, we said be watching for patterns. And if market will show here is probably it should show some a bit higher action, because once XOP has been reached, major resistance was not. And we were watching when the market will hit the level first, and actually we were needed to get the close above the 3x3, which yesterday we haven't got yet. So currently, take a look what we have here. First of all, minor butterfly, you could just recognize it easily. So here is a butterfly, probably it's lots of patterns have been formed, actually, guys, you can see. It's butterfly on the 15-minute chart. Here you could see also some minor hand and shoulders has been formed on the 15-minute charts. Market already has passed through it. Now you can see flat head and shoulders minor also is forming. Well, with having the divergence here as well, right at the bearish, right at the confidence area, maybe it makes sense, or at least it could be tried to take the position with the stops slightly above this area, with the stops above right above this level, and in general above this consolidation, maybe just for example above this top. This could be using this area, because if markets start more moving with the brand bodies, probably should start somewhere from this area. So but at the same time I have to say that this is of course not the perfect bearish price behavior that we would like to get. So it's a bit skewed. Initially I thought that maybe it will be 3 drive, but not yet currently. So maybe, well, it's difficult to devise something in the current situation. So maybe another butterfly might be formed here. It's also possible. So in this case, maybe it makes sense to hide this type somewhere above the 1305. Anyway, this will be just 30-35 pips risk, and this is your personal choice how better to do. For me, this type of action, well, it's not very impressive. So we do not have yet the clear pattern that tells you that yes, market stands in downward reversal and ready to pull back. But sometimes it happens that market just is showing some wobble action around the resistance and gradually start turning down and start dropping. This also could happen. So, and this choice is up to you. Maybe it made sense to split the position, take some part here and watch what will happen next. Watch for another reaction. But market stands currently at the confidence resistance and shows the divergence on the lower time frame. Well, theoretically, it might be it that we are watching for possible starting of the action here. Also, let's take a look at the cable. On the cable, if you remember last week and the previous couple of weeks, we discussed actually the pullback from this XOP, and we said that might be the point where upward action could start. So we said, again, as we currently talked about the euro, you could decide whether you would try to take position immediately with the carrying risks that maybe market will just could break it, or wait for some another pattern. So those who are taking position here could move stops to the break even. Those who are waiting, you could turn to our second confirmation pattern. As we discussed, that might be the head shoulders. So it could be left shoulder, head, and as we expect some pullback on the euro, on the cable, it also might be some pullback. Besides this week, we'll get the decision from the Bank of England. Also could bring some volatility, whatever decision will be, and maybe market could complete this pattern. So these two moments to keep an eye on. But more interesting, of course, is the euro and what will happen around this area, because I suggest that's, well, difficult choice actually, because in general the situation is ready for a pattern, but unfortunately we have a bit blur and choppy action on the lower time frames without any clear pattern. That would have make us to extend the stop. So if we would get some clear pattern, we could place stop a bit closer. But here we have to get additional insurance, suggesting that maybe it will be the butterfly, maybe it will be some another spike up. It's also possible. So we have to place stop for somewhere above this area. That's actually the reality that we have on the euro currency. Well, think about it. Maybe you wait for the session. You will see something more later. Within a few hours, situation could change. That will be more acceptable for decision making. But in general, we're at the point, and just let's keep watching and make the decision on this brand body trade.